Happy Friday, traders, and welcome to the last trading day for the first month of this year. Look, if January is anything to go by, it looks like we are in for a crazy 2026. The big focus for the first month of the year certainly has been what has happened to precious metals, both gold and silver. Been absolutely phenomenal raging bull markets. Silver is up a whopping 60% for January alone, and gold up a whopping 25% as well. So absolutely huge gains for both of those. Gold did hit a new record high yesterday during the Asian time zone, almost up at $5,600, and silver also new record highs yesterday, up at 121. But look, we have had we've seen some extreme volatility hit both of those markets. So yesterday, when we did hit those record highs, we saw gold gap lower and violently in the US session, fell almost $500 back down to 5,100, and silver got hit about 10%. Before we saw the buyers step back in and take them all the way back up to almost being square for the day. So again, look, this is not normal volatility. This is next level extreme volatility. So really, it doesn't allow traders to hold positions for any sort of length of time. This is now, making traders trade like real short-term stuff. P&L's on the table, really got to be taking it off. And also, look, these markets, you have to be working stop losses, because if you don't, these ranges are so big on a daily basis that your account will be liquidated. If you do not, if you're on the wrong side of the market and don't have stops. So look, yeah, certainly you've got to be super careful in these markets now, because certainly what is happening in gold and silver, these are dangerous markets, and it doesn't look as if this volatility in those markets is going to die anytime soon. So moving along to with the commodities, crude oil. Look, crude oil has had a fantastic week. On a daily basis, it's just been inching up the whole time. It was up 3% yesterday overnight, and actually traded above $66. So yes, crude has been doing exceptionally well. And the big reason why crude is doing what it's doing is that traders are getting super worried that a war between the US and Iran is imminent. And they're worried about what that could mean for crude supply, especially if the Strait of Hormuz is basically closed by the Iranians. Over 20 million barrels of crude go through that strait on a daily basis. Shipping insurance companies have actually increased insurance to ships that go through that strait by over 300%. So obviously, they are worried that this war is something that is a serious concern and could happen sooner rather than later. So look, yes, one market is really worried about the Iranian situation, and I'd imagine that crude oil going into the weekend is because weekends is generally when we do actually get the strikes by the US. That they don't do it during market hours, so to obviously not promote volatility in the markets and get markets sell off violently. So going into the weekend, I'd imagine that crude probably will finish at the highs of the day and potentially the highs of the week. So I wouldn't be going in and fading or selling crude, going into especially the weekend, because obviously you do have gap risk. If something does happen this weekend, crude could gap open violently, well above $70. So anyway, yes, being long crude at the moment is working, and I'd imagine until we get some sort of resolution from what is happening in the Middle East, it is going to continue to do well. Okay, so moving on into the currency space. So finally, in the month of January this month, and just in late this month, we've seen some action in the currency space, which is good news, because currency space has been pretty bloody boring for a while. And the market has firmly now in sell US dollar mode. So traders are piling on the short US dollar trade. The Aussie dollar just continues to benefit from this. Almost hit 71 cents yesterday. We did have some hot inflation numbers out of Australia this week. We've got an RBA meeting coming up in Tuesday next week, so that is super close. Market is expecting the RBA to raise rates. That is a big deal. It's the only Western central bank that is looking to raise rates. The rest of still have an easing bias or still need to cut rates. So look, the Aussie dollar 100% is a buy on any sort of dips. The other currency that certainly has been interesting is obviously dollar yen. It's a big sell-off in the last few weeks from in the last week really, from plus almost up towards that 160 level, almost down to the 152, and it's currently trading just above 153. But the monthly text, monthly close is going to be important, but it looks with high conviction that we are going to print a bearish key reversal month. So that is a technical top formation or signal, and certainly telling you to get short, and much lower levels are coming. So yes, now selling dollar yen looks like it should be a decent trade. The equity space has been a touch boring. Yes, we are sitting up around elevated levels. Equity market really potentially maybe underpricing or mispricing, or what is happening geopolitically with Iran, because certainly if something did break out there, and the crude market was right, and crude does spike, these equities are flying way too high. So look, I would not be going into this weekend along equities, that's for sure, because obviously the gap lower is the risk. The other big move that we've seen just recently is Bitcoin off 5% last night. Bitcoin has been struggling. End of last year, Bitcoin actually put in a negative year. It's down about -6-7%. Normally it has a high correlation with US equities, especially NASDAQ. And obviously US equities did have a positive year last year, so it never really followed, so a bit of disconnect with that correlation, and it's been struggling around that 90,000. Hasn't followed precious metals, hasn't followed risk, and yes, struggled really above 90,000, and yesterday got kicked back down to 83,000. So look, it seems like it is the weak link in markets, and certainly if markets did start to roll risk off, I'd imagine that we could see Bitcoin sharply lower. Obviously the next level look out for is 80,000. If we break that, no doubt there's going to be some pretty wild liquidation, and could see a spike lower from there in the short term. So at the moment, yes, I'd be going along with the Bitcoin shorts. They are working. It is struggling. It is a weak link. Anyway, look, it is Friday. We've got the weekend coming up, and look, I'd be careful about gap risk with something potentially could happen with US and Iran over the weekend, and obviously on Monday these markets could be at much different levels. So anyway, good luck with your trades at the end of the week. Catch in with you again early next week.